But beginning things today, difficulties in marketing cattle in the second quarter of 2020 increased demand for retail beef products, causing wholesale beef prices to jump. So how did higher prices impact beef export sales and commitments in 2020? And what can we expect as we move through 2021? Market Journal's Bill Dodd caught up with UNL Livestock economist Elliott Dennis to learn whether seasonality patterns for beef export sales and commitments will hold throughout the year.
When it comes to tracking beef exports and trying to determine how 2021 will shape up, you can get your numbers straight from the USDA's weekly export sales report. This report has extensive information, including previous sales that have not shipped during the current marketing year. Year-ending data for 2020 indicates that Japan and Korea account for nearly 60% of all exports that were shipped, whereas China and Hong Kong have much higher outstanding sales. UNL Livestock Marketing and Risk Management economist Elliott Dennis points out the importance of keeping a close eye on purchase commitments and outstanding sales versus shipped exports.
So there's a difference between commitments and product that actually ships. And so we can look at who's bought product and who's actually shipped product, and that's where we can figure out how much product still needs to leave the country. When I looked at who actually had made the commitments versus who had actually shipped the product, what we found is that about on average, each country that we do large amounts of trade with, it's about 7% of product that's been committed but hasn't been exported through the end of the year. But then we look at probably the most promising location for beef exports, Hong Kong and China. They're a big buyer of beef. They make about 20% of the beef exports that were committed, but there's still about 30 to 35% of export that hasn't left the market. And so when we're talking about, what is China potentially going to do with beef, really what we want to see is the beef that's already been committed or bought actually leave the country. And that's why we look at commitments as a measure of what should be leaving the market, but then when we look at what actually ships, that gives us the true number on how that's going to impact domestic prices, because as long as it's still in the U.S., it puts downward pressure on price because it actually hasn't left the country. But once it's shipped, we call that officially exported, not just committed. Then that has a reflection on the price.
With 2020 being a year where everything was impacted by a global pandemic, the cattle markets were bound to take a hit in many phases of production. With hindsight, could we glean any information from past market events such as the 2003 BSE event? Also, what should we focus on as we look toward a possible recovery in 2021? Elliott tells me not to put too much weight on first quarter exports.
Yeah, so the BSE and COVID-19 is a little bit different market event. So one was really a demand shock where consumers weren't able to go to food service restaurants, whereas BSE had to do with more of a supply shock where there was concern about BSE and so they had stopped shipments on cattle. Really what we found is that BSE had a much larger shock on the export commitment seasonally than COVID-19. And while we were experiencing a lot of difficulty here on the domestic market with packing plant slowdowns and also shutdowns and not being able to go to restaurants, export commitments actually stayed pretty robust during that time. And so right when we were experiencing those plant slowdowns is when we should have been actually increasing a lot of exports. And so COVID did drop us off a little bit on export commitments, but overall we maintained pretty well to what we'd consider like the 10-year seasonal average for export commitments. It's really important to know as we go into 2021 because the first quarter is always the lowest time for exports. And so when we're talking about recovering, the marketplace recovering, really not put too much emphasis on those, first quarter export numbers because those tend to be our lowest commitments throughout the entire year.
While there are too many unknown variables at play to know exactly how 21 will shape up for exports, we know we're entering 2021 with a near record number of cattle on feed and marketing below last year. This could mean an abounding amount of meat will come to market during the first quarter of 2021.
Yeah, so that's what I think a lot of people are asking, how fast is this recovery going to happen? So I think there's a couple things that are happening right now. First, the USDA cattle inventory numbers came out, showing declines once again in the cow herd. And so essentially what that means is there's going to be less heifer or less feeder cattle going into the market this year, and especially in 2022. What that ultimately does is that starts to raising the price of cattle, and as cattle get more expensive, we start to see exports go down a little bit. And so what we're really going to have to see is how well the demand for domestic meat products holds up in the marketplace. We have our primary buyers like Mexico or Canada, South Korea, Japan. If they remain strong buyers, and that really depends on what their market's doing and particularly what Australia is doing with their exports. And so I think there's just a lot of unknowns right now what we can expect into 2021. The biggest thing when I'm talking with producers is let's watch the exports, because those make up 15 to 20% of the domestic wholesale price. And so what happens abroad really makes an impact on the prices that we see domestically.
All told, exports will vary throughout the year. However, if you can examine how the market worked through the supply and demand disruptions of 2020, you should be able to get a good idea of what 2021 will have to offer. Reporting for Market Journal, I'm Bill Dodd.